Welcome to Performance Optimization Strategy Advance. Myself, Srujit Kakkar. For more information on our products and courses, you can visit www.surjitkakkar.com. Before moving ahead, please make sure you go through the disclosure. I will keep it on the screen for some time. Performance Optimization Strategy Advance Part 4. In this session, we will understand how to add more probability to trade setups. All quality zones look the same, but we need to identify best versus good. Let's assume we have a structure of drop-based rally on the lower time frame. If you look at the leg out on the refining time frame, there can be two scenarios. First scenario, we started with a strong move which later started becoming weaker. Second scenario, we started with a weak move which later started showing strength. If you look at which scenario shows better strength, it will be the first scenario. This is how the refining time frame can help us to better understand the strength of the zone. If the zone on the lower time frame has too many candles, we give it a lower score for number of candles in the basing booster. Like in this case, the booster scoring will be 1. But if you look at the same zone on the intermediate time frame, multiple candles of lower time frame might combine into few candles on the intermediate time frame. Therefore, when zones are located at the best location, by best location we mean lower time frame demand zone at very low of the curve or lower time frame supply zone at very high of the curve, the booster scoring for number of candles in the basing can be done from the intermediate time frame. Let's look at an example. Here we have a structure of demand zone which is a drop base rally. From this demand zone we anticipate price to move up. Therefore, when the price retraces into the zone, we will be going long and stop loss will be below the distal line. When the price retraces back to this zone, the zone gets violated and price starts moving up. If we look back in history, the drop base rally was formed as a test of a rally base rally. Therefore, a reversal pattern might not be a zone but a test of a previous zone. Such zones are called as non-authentic zones. Reversal patterns are also called as structures of pivot. Reversal patterns can be non-authentic or pivots. Therefore, whenever we are using reversal patterns for trades, we want to add extra probability. For this, we have two different rules. Aggressive rule. Before applying boosters, make sure the move from the zone was able to violate at least one opposing zone on the intermediate time frame. Conservative rule. Before applying boosters, make sure the move from the zone was an impulsive move on intermediate time frame and we have an authentic zone on the refining time frame. Impulsive move. Move which creates new high or new low compared to the previous high or low respectively. You can see the price has been moving up. If you look at this high, the move to the upside was able to break the high and create new high. If you look at the next high, it was again broken by this move to the upside. Even for the last high, we have the same case. The move to the upside was able to break the high. All these moves which are making new highs and are marked in green are called as impulsive moves. On the right, you can see that price has been moving down. If you look at the low, the move to the downside was able to break the low and create a new low. If you look at the next low, it was again broken by the move to the downside. Even the last low, we have the same case. The move to the downside was able to break the low. All these moves which made new lows and are marked in green are called as impulsive moves. Move which does not create new highs or new lows compared to the previous high or low respectively is called as a corrective move. All the moves which did not create new highs or new lows marked in red are called as corrective moves. Let's understand aggressive rule with an example. Here we have a demand zone drop base rally, which is a reversal pattern, means it can be a pivot or a non-authentic zone. Before applying the boosters, we will make sure that the move from the zone was able to violate at least one opposing zone on the intermediate time frame. Let's understand conservative rule with an example. Here we have a demand zone drop base rally, which is a reversal pattern, means it can be a pivot or a non-authentic zone. Before applying the boosters, we will make sure that the move from the zone was an impulsive move on the intermediate time frame, and we have an authentic zone on the refining time frame. Prices are moving up, after which they start trading in a range. After a while, price again starts moving up. This forms a demand zone on the chart, which we call as a rally base rally. The basing is the area where equilibrium got converted into imbalance. Let's assume from the basing price starts moving down and then starts moving up. This tells us that the imbalance was created a little lower, not at the period of pause. Similarly, on the right you can see prices are moving down, after which they started trading in a range. After a while, price again starts moving down. This forms a supply area on the chart, which we call as a drop base drop. The basing is the area where equilibrium got converted into imbalance. Let's assume from the basing price starts moving up and then starts moving down. This tells us that the imbalance was created a little higher, not at the period of pause. When the price goes below or above equilibrium phase, it does not represent quality, and such structures are called unstable equilibrium. To qualify unstable equilibrium, we should have a stable structure on the refining time frame, which means at unstable equilibrium demand zone, a stable structure of rally base rally should be available on refining time frame. At unstable equilibrium supply zone, a stable structure of drop base drop should be available on the refining time frame. This is Sujit Kakkar signing off. See you in the next lesson.